Hey guys, it's Trader Tanashi, and today I'm going to analyze Pain X999, which is similar to Crash, but it's on a different broker, which is Wall Street. So I had already analyzed it with the group, but I will start over and then we do an analysis together. Okay. So if you're new to the channel, make sure you subscribe and you won't miss out what we have to offer on the next video. So like always, the first thing we do is look for the trend. Look for the trend, right? We want to see if we're in an uptrend or a downtrend. So in a downtrend, we are creating lower lows as we go down, right? So this is a lower high, this is a lower high. As the market goes down, we are creating lower lows. So you can see right here that this is a lower low, lower high, lower low, lower high, and basing on that theory, it's supposed to create another low as it goes down. So just like that, you know what the market will do, right? You already know, but you don't have the entry. Okay, so we are on the 1 hour time frame. We zoom in a bit so that you can see exactly how the market is going to move, how the market is going to act. Okay. So basing on this, the first thing we do like usual is we take our parallel channel. This is the parallel channel. We touch the highest point, which happens to be at the top here. Then we drag it. We drop it on the second high, which is right here. This is the second high, but you have to make sure that it covers to the end here. So you can see we drop it here. Then we touch the lowest point, which happens to be here. This is the lowest point. We place it right here. So after we place this, we can now tell that the market is obviously in a downtrend. The market is going down. The market is going down. As you can see, the market is going down. So we're expecting the market to touch this point before it goes up, or touch this point, break out, and go down. Okay, so that's how the market moves. You already know that the market is going down, and we just confirmed it on the 1 hour time frame. But now you want to catch the trade now. So we move on to a smaller time frame. In this case, I'm going to move on to the 30-minute time frame. Okay, so right now I'm at the 30-minute time frame. I'm looking for my trade. What I would do now is place my horizontal resistance or horizontal support. Take my rectangle. Okay, we find an area of rejection where the market rejected before, like this point right here and this point. You can see that it rejected it before. We place our candle. Okay, it comes out something like this. Okay, we also have this area of rejection below. Okay, it's a support, it's a rejection, whatever you can call it, and it's also a resistance. You can see that this is a huge area of support and this is a huge area of resistance as well. The market came and found its support too many times here, and at the top here the market came, got its resistance. We also have this zone right here. We touch this low and that low. Right, we now have the zone. We now know where the market is likely to hit. We now know that these are strong zones. This is our first strong zone, our second or third. So between these zones is where the market will start moving. Okay, so today I'm going to teach you something new. I'm going to teach you what we call the 5-wick rejection. So the 5-wick rejection is when the market rejects a trend line for at least 4 to 5 times. That makes the trend line super heavy and it's hard to break. It means that the market will fall. So we take our horizontal line, then we place our horizontal line here. Right. If you zoom in, you can see that you can tell how many rejections we have. Okay, we have the first one here, we have the second one here, we have the third one here, we have the fourth one here, we have the fifth one here. That is the 5-wick rejection. So the 5-wick rejection is when you place a trend line touching the body of candles, and then we have separate lines, separate candles that come and close under this trend line. Let me just try to illustrate that. We've got bodies of candles that close under the trend line as the market goes. Sorry. It's not coming out that well. But as the market goes, the market keeps respecting this line. Goes up, goes down, goes up, goes down, and respects our trend line, but doesn't close above the trend line. You'll only see wicks only, but you'll never see a candle close above the trend line. As you can see right here, there's 5 candles. The first green candle has a wick that's above. Then we skip the second one, we skip the third one because they closed below, they didn't have their wicks above. Then we have the second red candle here, which closed below and created a wick above. And then we have this one, and then we have this one, and then we have this. As you can see, the market is already falling massively. So this alone would indicate a perfect sell for me. So based on that, using the 5-wick rejection method, I now know that this is a perfect entry, and all I have to do is put my trade. So my short position was going to be right here. Then my stop loss would be after the first zone, which would be somewhere here. And then my TP would be at the bottom there. So if you hadn't taken the trade and you're seeing this now, it means you can still enter the trade and you hold it too, yeah? If you risk $100, you're going to make $353, which is a 1:3.5 winning ratio, which is something that's really good, and I would advise you to take trades like this. So guys, with this strategy, you'll never miss. You always make money with this. So I think that's all on the Paying X999 trade. Yeah, see you at TP. Thank you for watching. Oh, don't forget to subscribe.